All right, I want to talk about this earnings trade I did on NVIDIA. So Thursday, November 14, when NVIDIA was trading at around between 208 and 210, I knew that NVIDIA was going to announce earnings after market. So after 4 o'clock, when market closes, NVIDIA was going to announce its earnings. So I placed an options trade, an iron fly or an iron butterfly. And since NVIDIA has gone up like crazy in the past 6 months, as you can see, I made an assumption. I made a directional assumption. I felt like NVIDIA was going to drop a bit after earnings just because it had gone up a lot already. So I felt like it was going to pull back after earnings announcement. So when NVIDIA was trading at 210 or 209, I sold an iron butterfly at a 205 strike. As you could see here, the second line here, I sold the 205 call and the 205 put, and then I bought the 210 call and I bought the 200 put for protection. You could see the difference between the short strike and the long strike is $5. For that, I collected, as you can see here, $4.54. I did one contract, so times 100 shares, I collected $454. Since the difference between the short strike and the long strike is only $500, my max loss is, worst case scenario, my max loss is $500 minus the credit that I already received. So 500 minus 454. So my max loss on this trade is $46. And my max loss would occur if come expiration of November 15, NVIDIA is trading below 200, so below the long option, the long put option, or above the long call option, the 210. So come November 15, which is the expiration, if NVIDIA is trading above 210 or below 200, I would be achieving max loss. I would have to buy back this trade for $5 or $500. That's the max I can pay, $500, because that's the difference between the long and the short. Now, since I already collected $454 on this trade, then my max loss is only $46. Now, for me to keep all of this $454, NVIDIA would have to trade at exactly $205 come 4 p.m. November 15. Now, if you look at the action of NVIDIA, now, of course, I don't know where NVIDIA is going to land throughout the day, of course. NVIDIA actually started the day at 211. So already when the day started, this trade for me was a loser. I had already accepted that I would achieve max loss on this trade because the day started, NVIDIA was at 211. It already went past my 210 long call option. So since I'm already achieving max loss, I decided to hold on to it, wait till the end of the day and see what happens. It might move. And guess what? It did move. It slowly dropped. It went all the way down to 201 even. So it almost went to the other side of this trade. So even below 200, I would achieve max loss. So it went from one extremity of the max loss to the other extremity of the max loss. But I had placed a limit order, and my trade got executed. I ended up closing it when it was trading at around 207. So when it was trading at 211, in my mind, it's already a max loss, but I didn't close it. Decided to give it a chance till the end of the day. And when it dropped to 207, I don't know if it's going to continue dropping. It might go back up, and then I would regret not closing it at 207. I have no idea where it's going. So I decided to close it at 207. So as you can see here, I paid $303 to close it. So I sold it yesterday, or November 14, I sold it for $454. And then November 15, I bought it back for $303. Now, if you look at NVIDIA at the end of the day, it closed at 204.19. So in fact, if I had waited till the end of the day completely, I could have closed this trade for around $25. So instead of closing it for $303, I could have closed it for $25. And then I would have made a profit of almost $425. But of course, how am I supposed to know that NVIDIA was going to close at 204? I mean, I closed it when it was trading around here at 207. Closed it at 9:50 a.m. If I had waited and then I had seen it go all the way down to 201, I would have been pissed at myself that I didn't close it earlier. And even at 201, I would not have known that it was going to go back up. And then even then, it went all the way up to 207 again. I probably would have tried to close it then. And even when it was trading at 205, which is where I would achieve max profit, because there's still time in the trade and there's still some premiums left, some time value left in the options. So I would not have been able to close it for $0 when it was trading at 205 throughout the day. To really achieve max profit, it has to be trading at 205 come expiration final minutes. So I could have closed it for less throughout the day. I probably could have closed it for maybe $200, maybe $150 throughout the day when it was trading around here. But definitely if I had waited till the last minute, I would have closed it for around $25. Would have made very close to max profit. But instead, still made a profit of $151 minus commissions though. Got to remove commissions. So commissions to open the trade and commission to close the trade, total combined is $16. So I made a profit of $135 US with this 1 day trade on NVIDIA. Obviously there was an element of luck, but it comes from placing a lot of trades. By watching the stock a lot, you tend to understand the behavior. Normally, I don't like to make assumptions on the direction, so I'll usually just sell at the same price it's trading at. So normally, while NVIDIA was trading at 209 or 210 on November 14, I would have sold an iron butterfly at 209 or 210. But the only reason I went with a 205 short strike in this case, because I felt like NVIDIA had gone up a lot and quickly in the past 3 months, so I felt like it had a better chance of dropping a little bit. Even at 210, I probably could have made a profit if I had closed it early in the morning, because early in the morning it was trading at around 210. So if I had sold an iron butterfly at a 210 strike instead of a 205 strike, I probably could have closed it for the same thing. But it's just disappointing to see that if I had held on to it till the end of the day, I could have made $425 profit. But of course, I don't know that. I don't know where it's going. So can't be too disappointed, but it still hurts to see that. So this is the type of trades I like to make during earnings, because most of the time, stocks do not move outside of expected range. The volatility that's priced in the option premiums before earnings is very high and drops right after earnings is announced. So by placing an option selling strategy before earnings and then buying it back right after earnings, most of the time you can take advantage of the expensive premiums that's priced in the options before earnings and close it for less right after earnings. All right, so if you have any questions, leave them in the comment section below. Like always, if you're gonna open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.